Alright, hello everyone. It's your friendly neighborhood taxi driver and DoorDash dude, stock investor and all that good stuff. Hope you have a good day. It's February the 24th. And it's out here in Welcome. Had a DoorDash and a customer combined and ended up coming down here. It's always a treat near where RCR is located. Get back on 52 here. Just give you a quick update. Stocks took a hit today. DoorDash just had their announcement and so forth. I was reading through it, doing a few shares of it. It's funny that when you have a portfolio, one of them, the main one, has about 25 stocks, REITs, and ETFs throughout the years, and there's like 3 or 4 get the most attention. Most of them don't, but that's good because it means they're pretty reliable. But I just want to mention one thing about asset protections. Oh, they ain't going. I was talking with a customer earlier. He's talking about getting the food truck. He works in the restaurant business. We throw some ideas, and one of them, which is talking about getting a loan, and it sounded like really good interest rates. I'm like, oh, that'd be pretty cool. And you hear a lot about, if you study financials, start getting into it, and learn how to build wealth and so on and so forth, you get some situations where that are good, or you hear some folks talking about getting out of debt. Dave Ramsey's real popular with that, and so on and so forth. And personally, with Dave Ramsey, it's better than nothing. All right, some of his numbers are outdated. You have to move up, but some folks don't want to be in debt. They rather get out of debt, and that's cool. Ain't nothing wrong with that. It's actually a really good thing. I don't hate on it, not one bit. But we was talking mainly about asset protection. It's really windy. If you can't hear me, bear with me. I apologize. The most important rule of investing, before you increase value, before you increase your assets, you have to protect them first and foremost. And I get a lot of hypothetical questions asked about, should I pay my mortgage off? I got a mortgage. I got like a low interest rate. I got it pre-COVID at like 4%. If you're asking me, personally, I say no. Yes, having a paid off house is awesome. A lot of people don't have that. But the thing is, if you pay off your house now, and it'll go up more often, go up value, take care of it, good area and all that. To me, there's a conundrum where if you do that, the S&P 500 averages over its lifetime 10%. And I'm going to get into real estate, don't get me wrong. It's a great investment. People got rich from that, okay? You can have nothing, go be just in real estate all your life, only in real estate, and you become wealthy, be whatever your goals are in life. Real estate is a great investment, no doubt. You gotta have a place to live. The conundrum, I don't know if I mentioned this before, but the conundrum I have with real estate and the stocks and market, the stocks I'm heavily biased, is that when you deal with real estate, even if you're in a good area, your potential customers or potential scenarios that goes up in value is local to your area. So if you're lucky enough, and I'm going to use an example, buy a house between Baptist and Forsyth Hospital and Winston-Salem. We call that the Ardmore area. If you're not familiar with Winston-Salem, it's a really good neighborhood, very good neighborhood. You should go up in value over time, and I'm going to lead that to in a minute. The thing about the stock market as a whole, not just New York Stock Exchange, but all of it, London, Tokyo, and everything, even the commodities in Chicago. The world, you're not local, the world is your customer base. The world, planet Earth itself, all 8 billion people. And because of that, it has more movement, obviously, than real estate will have. But it's international, it's the whole planet. All right? And I'll give you a great example why this is a conundrum personally. And there's pros and cons in all of it. And like I said, either one's a good way to go. If you don't want to mess with stock market things, gambling, and real estate, you can't go wrong. You know what you're doing. But it's not it don't start off as a passive yet. You have to work it. It's a business. It's an investment, but it's a business. You have to work it, especially if you own duplexes, houses, and whatnot. You're the person that will be repairing it. You're not ready to hire a property manager until you get big enough, okay? So keep that in mind. But it's a great way to make money if you know what you're doing. About a few years ago, a little after COVID, I saw a house for sale. I don't remember exactly where, and if I did, I wouldn't mention the address for privacy. $320,000. Decent house, real nice house, over there in the Ardmore area between Baptist and Forsyth. Actually close to more Forsyth than it was Baptist. The house, they were asking $320,000. I don't remember the bed. I think it was 3 bed, 2 bath, something like that. I can't remember. It was a nice house. Just like that. The last time it was sold in 1991 was $80,000. So if you owned it, lived in it, raised family, blah, 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 and kept it and all that, you bet about a 4-fold increase. That's pretty respectable. And you had a place to live. And a good neighborhood, too, on top of all that. Well, little parts chain started up in 1979. They went public in 1991, their IPO, and started off $8 a share. Not was a whole lot known about it, but it was another auto parts store. But if you dig into it, and if you worked in the garages, you know what I'm talking about here. They had a system called AllData, which if you work in, I'll put it this way, if you work in a garage, even back in 2008 when I worked at a garage, it was worth every effing cent. And they were on disc, CD-ROMs. Worth every penny. Told you labor rate, told you the best way to work it, had updated info, very detailed, very, very detailed. Let's see what we got here. No, I'll just let it die out. Very detailed. The best way to get information on auto repairing vehicles, from Chevy to Toyotas to freaking Saabs, old school Saabs. It was very detailed. Lifesaver. That little auto company was the creator and the publisher of AllData. I didn't know all this until 2019 when I actually was hired after the census. I never worked at 1 hour doing the job, but that's a whole nother topic of how the compensation worked. Spoiler, I didn't want money. So I found about it in 1991. It opened at $8 on IPO. 2019 it was around $800. But if you worked there, you got a 10% discount buying stock. So it'd be like $720 at that time. But never got to work there, or got hired but never worked there, so I paid full price. That's not bad. 100 bagger. We call that 100 bagger. Means each stock that doubles or increases value by double is a bagger, like in baseball. So it was already 100 baggers. So you took a chance on it. The IPO, very new parts chain. That was so many companies came and went. Corporations went. You took a chance on it, 100-fold. So you took a chance at 10 grand in 1991, which back then, even that's a lot of money, 10 grand back in 1991. It'd be a millionaire. So I bought a couple of shares of it in 2019. Last time I checked, it was at $3,400. And they did sponsor a NASCAR series at one time. They sponsored, I believe, it was Kenny Wallace. Stored them on the card. That little company's called AutoZone. AutoZone is the most, in all the years I've been doing this stock market thing, since last year, the 20th century, that is one of the most under-talked about stocks in all of the stock market, or one of the top 10 easily. Still not talked about much. One reason why they make a lot of money is because I mentioned ALLDATA. In fact, that's pretty much half their business. But one thing that AutoZone does, if you want to grow stock, they do not pay a dividend. That's a big tip there. If you want to grow stock, you want something to grow, do not pay out your investors. Big tip there. And secondly, they have very low, a low float, meaning that there's not a lot of shares you can buy of it. They do. I think they did a buyback a few years ago. Can't remember, but there's not a lot of shares that you can buy. I mean, you can buy 1,000 shares tomorrow. Probably it shouldn't be no problem. But relative to other companies, they have a low float, meaning that. So, little old company in AutoZone. It also leads to a very important thing that if you get into stocks, even Bloomberg himself during 2020 did not talk about Camping World. Camping World was off the chain. From the time lockdown went down to after a couple months later, you would have done real good if you did it right, because it went up and down twice. I mean, really high, really low, really high, really low, really high. You would have made you would have done really good. Very well. Very good. Nobody talked about it. I don't even remember them mentioning it on Bloomberg Radio. No one mentioned that, actually. I'm like, y'all seeing this? Everybody knew that Marcus Lemons was spending a whole lot of money on NASCAR and racing and NHRA and all that. Sponsoring NHRA for a little while. But they were just throwing that money left, right, because they were killing it. Basically, real quick synopsis. When lockdown hit, a lot of people didn't think they were going to camp, and then they realized, well, let's go camping, has something to do. We'll still do that. They did that. Then it went back down because, COVID was still going on. Then they shot back up because more people started camping even more. Camping World has like RVs, camping supplies, so on and so forth. And a lot of people just bought campers. I mean, a lot of people were camping out when they worked in the medical field, so they'd be away from their families outside so they won't get sick or potentially get sick. So a lot of that was going on. No one talked about it. No one. Now, I've never seen a mention about that. Interesting story. And there's a lot of companies out there that are killing it, are doing great, that don't get no attention for whatever reason. Usually it's Tesla, Amazon, Novia, DoorDash, Uber, and all them getting a lot of attention. Talked about a lot verbatim. IBM got mentioned today. So you really have to do your research. That's where you're gonna find your gems. You know, you have to learn about the ratios, what to look for, so on and so forth. You just can't throw a dart and hold your nose. Waste Management was a really good story right there. It made a lot of people money, but it was just garbage removal. But what are you gonna do? You know? What we got? Yeah. All right. See that? Someone's running, so let me take a picture of it. And I'm gonna call it night. And taxes what I do on this. One cool thing about Whataburger, they have a 24-hour lobby, so you get to use the restroom. It's pretty cool. So do your research, go find stuff. ChatGPT-4, although it's not as good as 2 was in that sense, it will help you out and it just help point the right directions. You have to go from there. And there's a multitude of books about that. We'll talk about it later. But yeah, always look for bargains because they're out there. You just gotta look for them. I mean, you don't talk about them a lot until they succeed, of course. You know, if you hear the media talk about success, and it's time like, okay, hit his feet, or Kramer talks about it. So I'm gonna leave on that note. Have a good night, Selena. I'll see you later, and you have a good one. Take it easy, and just leave comments below. Good night. Bye bye.